Have a look at how accurately the bot predicted this buying trend over here. Here also, the bot showed selling trend in the market, and this was also an amazing prediction. But the problem is, in ranging market, you can get deceived by these false signals. So to remove false trend predictions and be assured that you are opening a position according to the trend, I will share with you a strategy that gives amazing results. Let's get started. So I'm in TradingView, and I'm going to be using a 4-hour time frame on a GBP USD chart. First of all, let's add the first indicator of the trading strategy to our trading chart. Click on Indicators. In the search bar, type UHLMA crossover. Select this one, an editor's pick indicator written by Alex Grover. Now, this is a highly sophisticated indicator built on corrected moving averages, which gives it the ability to adapt to the current market conditions. This helps minimize the number of false signals, especially during flat market conditions. Once added, you'll notice two moving average lines on your chart, and based on their crossovers, the area between them either turns red or blue. When the blue line crosses below the red line, the indicator generates a bearish signal, and the area turns red, showing the market is trending down. Conversely, when the blue line crosses above the red line, the indicator gives a bullish signal and the area turns blue, indicating an uptrend. However, we are not going to use these crossover signals directly for trading. Why? Because these signals, despite the indicator's efforts to reduce false crossovers, can still lead to bad trades. For example, here's a false signal that occurred during a pullback in a downtrend. It wasn't the beginning of an uptrend, just a temporary retracement. In this strategy, we'll use this indicator only for trend identification. When the area is red, we'll look for sell positions, and when it's blue, we'll look for buy positions. Now, let's add the second indicator of the trading strategy to the chart.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
This is CCI. Click on Indicators again. Here, search for CCI and select this one. Next, we need to change its settings. You can access the settings of this indicator from here. Open the settings, and for the length, set it to 100. Then, in the Style tab, remove the moving average line and change the color of the CCI line to a more brighter color so that it is easy to see on the trading chart. These are all the changes we will do in its settings. Additionally, we'll add two horizontal lines. These lines are necessary for our strategy, and I will explain further in the video how we will be using these lines. You can select the horizontal line tool from the toolbar on the left, and then first of all place one line 25 level. You can always change the exact value of the line if you just simply double-click on it. This way you will not have to manually set it exactly at the 25 level, and the other horizontal line will be set at -25. By doing this, we are creating a middle range for tracking pullbacks. Now that our setup is ready, let's dive into how to trade with this strategy. It's a very simple yet effective method, so stick around until the end to understand all the details. As mentioned earlier, when the area between the two lines is red, we'll focus on sell trades. The CCI line plays a critical role here. For a sell signal, the CCI line must close below -100, and it should come from the middle range. I'm referring this area as the middle range. For example, in this case, the CCI line closed below -100 level, as we can see, and that happened after pulling back to the middle range, crossing it back down, and then crossing and closing below the -100 level. And all this happened while our trend indicator was showing a selling trend throughout. This confirms a sell signal. So if these two conditions are fulfilled, we can open a sell position here. The stop loss will go above the most recent swing high, and the take profit will be set at 1.5 times the risk. If you are a beginner, you should follow these rules strictly. But if you are an experienced trader, you can let the trade run without a take profit and rather use the trailing stop loss and take profit method to accumulate as much profit as you can. As we let the trade run, we can see it was a profitable trade. For buy trades, the conditions are completely opposite. Here, we can see the trend changed and that the indicator is showing a buying trend in the market. If we look at the CCI indicator, it is above the 100 level. But we can see there was no pullback to this level before that happened. So it filtered out this false signal and we would have not entered a buy trade over here, which is amazing. Here's another example. The CCI line pulled back into the middle range. Afterward, it closed below minus 100 level, and our trend indicator was showing a selling trend in the market. So this confirms that our sell signal is valid. We can open a sell position here. After we enter a sell position, place the stop loss above the swing high and target a 1.5 risk to reward ratio. The strategy is really amazing. So make sure to backtest it and share the results in the comments. Once again, this trade turned out to be profitable, but not every signal is valid. For example, if the CCI line closes below minus 100 level without pulling back to the middle range, we reject the signal. This helps filter out false entries. As seen here, rejecting the signal saved us from a losing trade because the price advanced after the signal. Now, let's go through some buy trade examples. When this area turns blue in color, it is indicating an uptrend. So for a buy signal, the CCI line must close above 100, and it should come from the middle range. As we can see here, the price crossed the middle range, and then it moved above the 100 level. This would be a valid buy signal for us. So as both the condition are fulfilled, we can enter a buy position here. The stop loss will be set at the recent swing low, and the take profit will be set at the same 1.5 risk to reward ratio. However, if the CCI signal appears at a time when the indicator has not converted its color to show the changing of a new trend, we'll reject the signal. For example, here we saw that the trend changed, and the CCI line was closed above 100. But since the trend has changed, there has not been any pullback of the CCI line towards the middle area, so this signal is invalid. If the price would have gone below it and then crossed above the middle level and then above the 100 level, all while the trend is bullish or the color of the indicator is blue, only then we would have entered a buy trade. So we don't take this trade. Sometimes you will not get valid buy signals for a long time because at that time, the price lacks the required pullback to the middle range. And that's a good thing. It helps us avoid trading in a flat market. Here's another example of a buy signal. We can see the area was blue, meaning the indicator is showing a bullish trend in the market. And down here, the CCI line closed above 100 level after pulling back to the middle range. This is a confirmed signal, so we enter a buy position here. Place the stop loss above the swing high and aim for a 1.5 risk-reward ratio. It's important to stick to the rules and avoid taking signals that don't meet the criteria, even if they look promising in hindsight. This setup is particularly effective in rejecting false signals during flat markets. That's it for this video. If you have any questions, drop them in the comments below. I'll be happy to help. Don't forget to subscribe and hit the bell icon so you never miss my updates. Thanks for watching. I'll see you guys in the next video.